Gentlemen, thank you for joining us. I've got to start with you, the Economist, because I want to understand from your perspective, after looking at those numbers today, slight increase. I mean, not 3 of a percentage point is little in terms of your overall numbers, but obviously if we put that in terms of people, we're talking a few thousands there. But those numbers that we saw coming through today, they are indeed showing us just how dire the situation is within the South African economy, isn't it? Is it getting worse? Is it getting better?
It's telling us two things. And so I sometimes worry when we actually just stick to the percentage.
Right.
Because there are two things that actually the number of unemployed people hasn't been different if we look at this period and then the period last year this time.
Right.
But what has changed is that actually there are more people who have been who've given up looking.
Right.
But further than that, there's been more people coming into the labor market.
Right.
And so that really tells us actually that things are getting worse,
yeah,
and that we are just not being able to see that. And I think we should actually be more concerned about the idea that the economy is actually not creating jobs. And if you look even deeper, that there are two sectors that are losing jobs, manufacturing and mining.
Right.
And these are two areas actually that many people would say this is the hope of our economy.
Why are they important, those two sectors?
Well, in the first instance, the mining sector has been historically important because it is part of the DNA of our economy, right? It is where we started this whole entire economy.
Yeah.
And I think in a big way, while people look at the mining sector as if it's on its way out, it isn't.
Yeah.
Gold perhaps is on its way out.
Right.
But certainly in terms of if we think about other areas where we're talking about steel and the more creative stuff, we are not actually on our way out at all. We still have a lot of promise there.
I was actually going to challenge you and say, shouldn't we be looking past mining? Because perhaps this is part of the problem where we are, isn't it? When we report markets, we talk about the FANGs because the world has moved on, right? Your digital companies are becoming the economies of the future. Shouldn't South Africa be focusing more on those types of industries? Yeah, don't neglect the ones that you already have, but recognize for what it is that these old industries, they are struggling and maybe are in terminal decline.
The problem with that, of course, is that these new industries that are coming up need a lot of skill.
Yeah.
So we need to develop the skills to be able to play there. And we know what our education system is like, our skills development system is like. And our investment in people also hasn't been very strong in terms of the private sector. So we would be jumping the gun. We've got to play to the strengths and to play to the economy that we've got.
Absolutely.
And this is the economy that we've got.
Yeah. Give me a quick synopsis again of the numbers that we saw today, so we have a clear idea of where the weaknesses are and perhaps where there's potential and hope for the future.
Look, I mean, nothing's really changing. I suppose the mining sector is quite volatile, but one of the key places, I mean, the mining sector coming down, the manufacturing sector, where we've been saying, there's a lot of promise there. And remember, this is the part of the economy where we're thinking that, we will grab from mining, we take from agriculture, and we process and we create this area of absorbing a lot of labor to be able to actually also export, because we keep talking about export and export and export. And even when we think about robotics, where are we going to manufacture this robotics if the manufacturing sector is unable to invest
100%.
And to bring in people?
Absolutely.
So this, I think, is a big story.
Yeah. Vimal, we are reporting on these numbers. In the olden days, if I were writing my stock market report, I would be saying, okay, so we have got the all-share index down almost 0.75%, top 40 down 0.9% on a day when we've had employment numbers showing just how dire the economy is. Is our market a reflection of just how bad things are in terms of our economy?
I think our market reflects two different issues. Firstly, the largest shares on our stock market are really priced internationally and they're exposed to international markets.
Right.
Those would be the likes of Naspers, Anglos, Bulletin, etc. And those dominate the performance of our stock exchange, and we've seen that those shares have come under a lot of pressure.
Sure.
However, the other part of the market which reflects the performance of that part of the market, which reflects the unemployment rate and the GDP growth of
when you strip out the impact of these other large companies,
which I call SA Inc.
Right.
The type of shares like Tiger Brands, etc. The locally focused, those sort of companies, they are also struggling. And we have seen it in our own business at Liberty as well. That consumers are under pressure. All right, they do not have that amount of capital to invest anymore, and that brings a lot of pressure onto the market and onto those companies that are focused on South Africa.
Would you say that the earnings reports that we have seen, the trading updates that we have seen, correlate with the numbers that we saw today on that unemployment front?
Look, I think there is a relationship. Whether they correlate over time or consistently over time, that's a different issue.
For sure.
But recently, what we have seen with the poor performance of our economy and the unemployment ratio going up, our local stock market has taken a beating.
It is taking a beating.
There are other factors as well. We all know that. You've got the state capture issue, which has been lingering for quite a while now, and we need to get through that. I think on the upside, what we have seen is the President's investment summit from last week.
Right.
Now, there's something exciting about that. Really, what the market is waiting for is, what does it mean for us individuals, for the consumer, for the downstream activities? Because that's what we need to lift GDP and reduce unemployment. 100%. And that will lift our stock market.
I have been puzzling about it as well since last week. 290 billion rand, $20 billion if you use whatever exchange rate that you use. By any measure, it sounds impressive. And yet, after Friday, after the weekend of those declarations being made, here we are, we're coming into a market that is sliding and continues to be under pressure. It's almost as if the market is discounting it. But we do know that, of course, this is money for the future. But I wanted to come back to Xhanti and ask you, from your perspective, whether the numbers that we saw being bandied around on Friday and at the weekend are important in addressing the issue of unemployment in South Africa, and to what extent we can expect that in the future these numbers will really kick in and we begin to make a dent on unemployment.
I think there are two issues here. The first one is that I'm sure a lot of market participants know that if Anglo-American shows up and declares or all of this, is that it's probably money that Anglo-American has been in the pipeline anyway. So this is not new money, and therefore it's been priced in.
That's true.
But then also that part of it was is that some of the other money is not quite clear in terms of when you actually start
commitment
to
of
it's
actual
one commitment,
work going
but it's
into
quite
the ground.
Another thing to say, these are the key projects,
Yeah.
And this is where we're going, because obviously everybody wants to see who is going to benefit here, because stock markets don't just, I mean, we always follow them in aggregate numbers, but really it's about, the different sectors. So if you think, well, actually finally we're getting those projects in the construction sector, for example, so the construction stocks. The construction stocks will start to benefit from this. Then, of course, the market moves, we are going into this sector, that sector. What is clear, is not very clear, is where, whether it's energy that's benefiting, is whether or not that money actually will move in into those sectors. So we can actually see a difference.
Yeah. Vimal, I'm going to come to you and ask you when the market begins to price in the kind of commitments that we are seeing. But I think more importantly as well, what appears to be public endorsement of what the government is trying to do, because one of the key things we speak about is the lack of confidence in the market, and is also in South Africa's economy. But Xhanti, I wanted you to, for a minute or two, be the President's economic advisor. You're looking at these numbers, and you're looking at the work that you did on Friday. How do you read those numbers, and how do you use them to ensure that you are not where you were yesterday?
Look, I mean, I think the President needs to move away now from the PR kind of stuff. I think that was a great PR, we all...
Is that what it was?
It felt like PR, we're all sitting at that whole church thing, I am declaring this. But you start to think about, guys...
Did you say a church?
Guys, how do we actually put in people to work? Remember, unemployment is not going to change until actually all these investments are about actually putting people to work.
Yeah.
And then we will start to feel, and of course, when you think about, even a country like ours that consumes a lot, that our consumers are the people who are actually unemployed, or where their earnings, if you are employed, are not actually growing at any impressive rate.
Right.
So the important part here is to say, how do we actually make sure that this money is deployed into making sure that actually we are getting people to work?
Are you saying the President must set up a unit that monitors the...
No, enough about setting up units.
Okay.
No. I think that's another...
Okay, I thought you were looking for a policeman.
The private sector, of course, is, is where the money should be going. And they've been asking for a number of things. They've been saying, for example, the government talks about, investment-led growth or government-led growth.
Yeah.
So we've seen, for example, around the parastatals being fixed.
Yes.
And they're an important part of leading, investment in the country.
Recovery,
and that is going to be important in terms of saying, okay, cool.
Sure.
You've changed management and all of that.
Yeah.
Now we need to move in.
Yeah.
Where you've been saying, for example, through Transnet, you're going to deploy, the President just before at the investment conference had a launch of this new center where we're going to manufacture
the trains,
and all of that.
Yeah.
Now, the private sector is waiting to actually participate in that. There's been a lot of companies that have been formed that have the technology, that have got the capacity to participate, to plug into that.
Yeah.
Now, we want to know when is that moving, because then as soon as that happens, then the private sector has that co-investing. I think that's the word we actually forget about that. Everybody wants to co-invest with the government because of the fact that in this country for a very long time, the government has played such a central role and has probably kept a lot of people out.
You are reminding me of a question that I like to ask from time to time. Is capital patriotic or should it be patriotic? But we'll park that for today. We'll have that conversation another day. Vimal, my question comes in. When does the market begin to price in some of the commitments that we are beginning, that we saw happening over the weekend? But also, I think the other important part of the work that the government is doing, restoring, repairing confidence in South Africa's economy.
So I think that's the two most important things. Firstly, to get confidence back into the market.
Yes.
And we're seeing green shoots there. I think the president has been saying the right things.
Sure.
He's starting to move in the right direction.
You like him?
Well, he seems to be saying the right things.
Sure.
All right, we need to see whether it's done.
Carefully.
Yeah, we need to see if it's actually done.
Yeah.
Slowly, he's getting through all the SOEs. He's dealing with the issues there.
Yeah.
But there are lots more issues as well.
Yeah.
And I think all of this is a run-up to the election next year. All right, I think he's tiptoeing his way into it.
Right.
Because you can't really do a wholesale change in one go.
Yeah.
There's too many different forces at play here.
Sure.
So I think that's the first part. The second part is, what's going to drive the local market is really earnings.
Right.
All right, confidence is just the first part. We need to see earnings coming through. Now, earnings will be great with investment, and that should stimulate earnings. At the same time, you've got the public sector wage bill, which the Minister of Finance has said is unsustainable.
Yeah.
So he needs to make a plan there. We know it has to shrink. Our public broadcaster is going through a retrenchment exercise or a 189 process at the moment, and those jobs need to be replaced in the private sector.
Right.
All right. Now, the private sector has to feel comfortable that they can invest in this market.
Yeah.
All right. So that's why confidence is just the starting point.
Yeah, 100%.
Right.
And confidence, of course, comes through from a stock market that is performing, which brings me to my next question for you, Vimal, around the kind of investment strategy that you follow at this particular time. Because we've been hearing a lot with the rand where it is, you should be looking offshore. And I am going back to my old question again, should capital be patriotic? But I'm not giving that question to you.
Yeah.
So how do you handle it then?
So look, I think this is a typical financial planning question.
Sure.
You know, each person is individual, each one of us, we've got different needs, we've got different, we're in a different financial situation. So that needs to be assessed. Where are we today?
Sure.
I always say the starting point is make sure you've got that emergency fund. All right, because you never know what's going to happen. If you've put aside money for the next 3 to 6 months, if anything happens, yes, you've got something to rely on. Thereafter, it's to look at all the short-term and medium-term goals that you have got and invest accordingly. I think what we also need to do as part of that exercise is to say, where can we get the highest growth rates? All right, within certain risk parameters.
Yes.
You speak to different financial advisors, you'll get different views. Someone will say, go offshore, I told you so. Look where the rand is.
Right.
You know, you should have gone there. Or somebody would say, if you were in South Africa, you could have performed well.
Right.
I know earlier this morning we were having a chat and we said, in 2009, if you were in the South African market, I think it was one of the best performing markets in the world.
Remember,
and for a couple of years, South Africa was the place to be. So you can never predict where returns are going to come from.
Right.
All you can do is to say, what are my goals? Diversify accordingly, and perhaps look for alternative sources of returns if you have that little bit of surplus assets on your side where you can take some risk, but you need to see out the term of the investment.
Absolutely. We've got to bring in Xhanti because we have run out of time. Xhanti, from your perspective, you look at what we are witnessing at the moment, and some people have said what's happening is that the president is slowly beginning to fix the things that have been wrong with SA Inc. For a while. At the same time, though, we do know that the president is preparing for an election next year. Would it be accurate to say that this economy is unlikely to take off until after we've got a new political team wherein we have invested our political capital and it begins to use it properly, productively? Because the accusation is that Tito couldn't move as quickly as he could because the ANC is campaigning.
Yeah, and I think that's going to be the biggest challenge, is that we're now about to get into full campaign mode. I think you could see it even yesterday. You know, the party is now starting to go out there, and therefore the ministers, who are the most popular people, the faces of the party, are going to start going out there and dancing and holding people and talking about this stuff. So that is going to take away a lot of time in terms of implementation. So we can't expect a lot there. But the president also, before long, has to show some credible results about what he has been doing, because there's no point going to an election with more promises and nothing to show for. So that balance is going to be quite important. It's hard to tell now if he's going to be able to achieve any of that in the next 3 to 6 months, which is the time he needs to show any credible answers so that people can feel
I'm going
confident.
to take some pain from my technical producer because I've got one more question for you before you go. In the midst of all this, the Reserve Bank, we saw that biannual report coming through suggesting that interest rates are going to increase. And in fact, what most media houses did was to read that as certainty that interest rates are going to increase. And I've got to ask you the question, is that the appropriate stance when you have got a crisis of the magnitude that South Africa has? 37% unemployment is what we're sitting at.
Likely the monetary policy work is better as a buck than a bite. And that what they are saying, we might increase them, that might be coming. It's just sort of signaling. I don't think that they would actually do such a thing at this time. But it is important that they actually sort of are putting it out there, something that they are prepared to do in the near future, rather than they actually implement.
I'm actually beginning to think maybe what we need is a Donald Trump in terms of economics. Tear out the rule book and start all over again. That was our discussion today with Economist Xhanti Payi as well as Vimal Chagan, Divisional Director at Liberty Investments. Gentlemen, thank you for coming through today.